for doing this again, Jean.
Mm-hmm.
It's been an amazing week in so many ways. It's the start of the new year, the new month, and it has been with too much information that is coming up on the Ugandan online space, especially things thanks to do with the capital chicken.
Mm-hmm.
And I know because we are doing a space for tomorrow with Miriam to do with the Ponzi schemes, but I thought it might be also wise for us to record for our YouTube content and audiences to highlight a little bit more about the Ponzis. And the story which has been in the news almost all week started around, I think, Tuesday, when the information started leaking in that Capital Chicken SMC had closed the shop. And we started asking ourselves, many people potentially have not heard about Capital Chicken. Then if you have not heard about it, you are lucky. For those who had heard about it, it was, and potentially those who had invested in them, they were about to lose significant sums of money to a company. They have no idea how it came into existence and how it has been operating that big. And today, as I was coming to do this recording with you, I read a story that over 80 people have so far reported to Chira Road Police Station, with some of them are retired police people. And the biggest story was one retired police personnel had put in close to 400 million of their retirement fund into a Capital Chicken and being promised to get almost 100 million every single year forever. And you have to ask yourself, how does this come to, how do our people who work hard fall prey to this? So today I thought we might start our conversation in that regard to talk about investment, talk about what are Ponzi's, the experiences. They have been here before for over 10, 15 years. But before we go into the details, could you kindly greet our viewers?
All right. Good morning, Alex. It's always very good to do this with you, and thanks a lot for passing by every Saturday. It's very interesting that you talk about Capital Chicken. I never thought that I'd even be talking about this. I
know.
May have had something around Capital Chicken a few weeks ago, and I was wondering what is this even about? I probably had a very different idea of what Capital Chicken was. I only really got to know what was going on a few weeks ago, when it was all over the space, and I guess when the Capital Markets Authority put something out to try and warn people. But anyways, we'll jump into that conversation. I'm glad we are doing this. So again, good morning to your watching audience. I really hope we'll have a lot to share to the audience in a way that safeguards them from future Ponzi schemes. But can we really safeguard people? We'll get into that in a bit as well.
Then let's start from here. I personally, my personal experience, I've ever been a victim to Ponzi's, and that was in 2012, 2013. For those who are still at university around that time, they still remember Telex Free. It is still fresh in some of our memories, and maybe that's the lesson we paid when it came to learning that investment and patient investment and growing your network isn't going to be a quick scheme, because I think I had put in around 300k and I was being promised to be given 50k every week for the rest of like 3 years. And I made the computation that with my 300k, I might end up earning close to 7-8 million for the next, at least I would have something to get to eat on. And truthfully, they paid me for 2 weeks. I will not lie to you. The Telex Free, the guys, the agent were dealing with at Ham Shopping Center opposite to Makerere University, paid me for 2 weeks, 50k, I collected. Then all of a sudden, we woke up one day and they told us it's closed. And then the story started trickling in. By the time they did the investigation, over 70 billion had been lost. And most of that money were for students. Tuition fees. This week, I had someone who was giving a story about that they had a dead year because of Telex Free. But then there has been other Ponzi schemes. Things like to do GNL, things like Alliance Global. Are they Ponzi schemes? All these network marketings that are promising quick, rich schemes for people. Now that's when it brings us to Capital Chicken. Now we have had this whole week, we have heard about Youth Africa platform, which is allegedly are promising people lifetime returns by investing 2.5 million in goat farming, smart farming. So all these stories tell you that maybe the market is there for even the people who crafted these schemes. They know the market is there. 10, 15 years since some of those started, 2008, 2009, long ago, up to now, someone will craft it out and they will have someone who is willing to come and give them money and get promised to what. And before, and also as I laid down the background of it, and we read a story on Twitter as I was trying to interview a few people, people who are proud to say when they see something that they can easily know that it's a Ponzi, they always want to join in as early as possible because they know how it works. They have mastered the craft of it. Go in quick, get most of your money out, move out before it crashes. And then that psychology, and that's where I want us to start from. As an investment, as someone who's at this investment, who works in this field, and who potentially try to understand the psychology of money, the psychology of capital, the psychology of investment growth. What drives our people to always fall victim to
the Ponzi schemes?
Yeah.
I'll start by saying I know we are talking about Ponzi schemes in Uganda, right? But first of all, this is not isolated to just Uganda. Even the word Ponzi comes from foreign land. I think there was an individual called Ponzi who probably crafted one of the biggest schemes ever known in history. And so this is where they derive their names from. If you look at some of the biggest economies, the United States, Bernie Madoff, just as an example, with the recent crypto scams, you've seen them all over the place. So even the biggest economies, those that we see as more developed than ours, are not immune to these things. In fact, you may find there's more incidences of Ponzi schemes or scams or whatever you want to call it in those economies than they are in countries such as Uganda. And this is probably only new. Just like you said, this only goes back 10, 15 years. But Ponzi schemes, scams or whatever we call them, have been here for us, with us for a very long time, almost as long as the capital markets have also been here, because they really derive their strength by mimicking legitimate
capital markets,
investment classes or schemes, or legitimate vehicles sanctioned by capital market authorities or similar authorities all over the world. Now, why are these things prevalent? It really goes back to what we are as human beings. We all assume we are rational. Because I've gone to school, I'm well educated, I think I will be making rational decisions. But human beings are inherently irrational. Okay, our decisions are going to largely be driven by a high return, and we will not, because rationality sometimes speaks to you optimizing, taking on a return for maybe a similar risk. But most times, because of our irrationality as human beings, because of our emotional or behavioral biases, we tend to be biased towards high returns and never really consider what sort of risk we are taking on, or even bother to understand what that investment vehicle or the promises being made mean to us. So these things really speak to our behavior as human beings and our psychology and how we operate.
I think, let me pause you at that point on behavior, because as a human being or as an adult, you work every single day, whether you are employed or you have a business you are investing in. You want to grow your capital, you want to grow your money, you want to invest. Like you have talked about globally, capital markets is where most people invest in. It might not be the same in Uganda, but it's where the future investments are. So inherently, it's within me to grow my money. The little I have, I want to plant them and they come more. So then that's tapping into that inherent desire for me to grow my money. That psychology of where at the end of the day, I want my money to grow. That's what people take advantage of. The question for me, I'm now asking myself is, how come people can't sometimes sit back and say, hey, I want my money to go, but what is the risk? What's the psychology that would keep someone to not to assess the risk, but only look at the benefits that might come or might accrue from them going with this particular type of investment.
All right. Yes, and the way you phrase that question is again making the assumption that human beings are always going to be rational, that they're going to say, I would love to grow my capital by X amount, but then am I taking on the right amount of risk? Have I understood this investment class and so forth? That is a rational mind operating, okay? But most studies will tell you human beings are inherently irrational. So we'll make quick decisions or even take mental shortcuts as long as it promises us a huge return, because that's all we are focused on. So yes, that's what we are as human beings. So how do you deal or combat that behavioral bias or irrationality? And for me, it just comes down to education and financial literacy. Since we're talking about finances, it really goes down to financial literacy. That if we can get more of our investing public conscious or aware of the basic financial principles, that will help combat some of those biases
and the biases,
and therefore maybe avoid us falling prey to some of these schemes. And what do we mean by financial literacy? It could be as simple as taking the trouble to understand what an investment is. What are the basics of an investment? Secondly, instead of just focusing, and I keep asking this a lot whenever I find people talking about investments, what's a good investment? It's a risk. We focus so much, or we bias ourselves so much on the return. That's why you see a lot of these schemes will come and promise 100% return, returns that you would ordinarily not see anywhere. And say very little about the risks, or simply say there are no risks. Okay? But someone that is financially literate will always know, in fact, in order to make a return, you need to take on risk. Okay? The two go together. I keep saying
same
double-edged sword. For that investment to produce a certain level of return, it means you've taken a certain amount of risk. So with that financial literacy, you then weigh up that, okay, fine, that's the gain that I'm looking to take. Is the risk worth it?
Which then brings me to the 2 points which I want to first highlight, and especially to our viewers. One, there are three classes in our societies, and I'm going to focus on Uganda, and someone might agree or disagree. One, there is the low income society, and sometimes to be in a low income society comes with inherent factors which will easily define them: low levels of education, low levels of financial literacy, high desires to make the quickest bucks. Then we have the middle income society, not so big, but a little bit elite. They're educated, they have some of the nicest jobs. And then we have the upper class, the rich guys. Now, when you look at the Ponzi schemes in Uganda, how they are structured, the biggest victims, the majority of the victims are always the lower income society. Members who, one, you'd expect them to be the most to be protected, because first of all, they earn the lowest. So you'd want, as a society, to protect them not to lose the little they have. Because one, they don't have so much education, they don't have so much financial literacy, which you're going to come back to. But two, then there is also the outliers in the middle income society that end up also going for these Ponzis. Like we have read the story today. Someone has worked for over 30 years. In the police, you retire by 60. By the time you retire and get a pension of around 300 million, it means you were at a rank which is high by the certain factor. You are earning some good money. How does someone who, and I want us to look at both those classes, the lower income society, how do we make sure, teach them, educate them, what do we need to do to ensure they don't fall victim to that? But also the middle income society, these outliers, that what drives them, and what do we need to tell them? Hey guys, there is red flags. You cannot put 300 million of your pension in such a scheme. Then also the third angle which I wanted to look at, and it's always hard to categorize, these are students, university students. You'd expect the university Makerere should be the tower of knowledge, but what knowledge? Why would the lawyer, why would someone studying to be an accountant, why would someone studying to be an engineer trust that I'm going to put 1 million into an investment that for me to be paid 1 million every 3 months forever. So then what kind of literacy, what kind of information and awareness do you want to push out to such people to know they shouldn't fall victim to such schemes?
All right, that's an interesting categorization that you bring, but I will beg to disagree on that, right? Because that makes the assumption that the affluent or highly educated individuals never fall prey to Ponzi schemes or scams and so forth. For example, if you look at the case of Bunny Madoff, that's the name, in the United States, a lot of his victims were A-listing Hollywood actors and actresses, highly educated, high-earning individuals. Those individuals are losing money in the millions. So that goes to show that it's not just the lower class segments of our societies that are prone to these schemes. So I prefer to look at this categorization as people that are either financially literate or not.
Financially literate.
If you're financially illiterate, you could be a lawyer. Okay, you've gone to school, studied to become a lawyer or a doctor, but you're financially illiterate. Okay, you do not understand the basics of what a good investment or optimized investment should look like, what are its characteristics, and you'll fall prey. In fact, a lot of these scams are just designed to target specific segments. For example, the capital chicken, by its nature and the amount of capital probably required to make an entrance, maybe targeted the lower income. But we also know there's schemes which have either been designed as hedge funds or private equity, targeting big money. Obviously, they will target the high earners who are most likely also going to be highly educated in different fields. So how do you safeguard yourself from Ponzi schemes, illicit financial schemes, and so forth? It's really to build your financial literacy. And we can get very shortly into how do you build your financial literacy. There's different ways to do that. And what I usually tell people is that you do not have to sometimes go at this by yourself. There's so many different financial services professionals, investment professionals that are accessible to you. Speak to them. That could be one avenue. Take the trouble and educate yourself. That, okay, fine, what does it take? Because there's also this misconception, again, which speaks to our irrationality. Everyone thinks they are a good manager of money. Just because I'm a lawyer or a doctor and I've been to a good school and whatnot, I should be able to handle money, or I should be able to make good financial decisions. So I
pause it there. Okay. There is a point you have highlighted, and I know a specific section of our viewers, this is where sometimes they get it wrong. Just because you are good at what you do doesn't make you a good manager of money. It doesn't make you a good planner of money. You might be an amazing lawyer and respected, but when you go to a doctor, you say, doctor, what's wrong with me? And they can advise you. If you are in that group of people who have jumped a certain level, what my friend Livingston calls food wars, then you need to start moving into getting certain professional services and investment advisory services. In Uganda, we have registered investment advisors, investment firms, where you can go and get professional advice instead of thinking every investment that you're going to make, or every professional or every money decision you're going to make. Yes, it's still low, but no, I wanted to highlight that especially certain class of people, that they need to embrace the professional services from the finance and the investment arm in the country.
Yeah, and that's a very good point, because if you look at a lot of what we would consider a finance professional, these are people who've been through rigorous training or experience specifically on financial principles, and there's a reason, right, and merits as to why they do that. So not just anyone can walk out of anywhere just because either they have a certain level of education or a certain amount of earning. Means that they will then be able to make effective financial or good financial decisions without necessarily trying to build their financial literacy. Okay. So for me, I'll maybe step out again, going back to your earlier point of categorizing people as low income. These schemes or scams can be designed to target any segment of our society.
Yep.
And the one thing that will really safeguard you is going back again, is that financial literacy. If I'm literate financially enough to discern a good investment or a bad investment from what a good investment vehicle, scheme, or structure should look like, then I'm at a better chance to avoid falling prey to a lot of these schemes than someone who hasn't either taken the trouble or is just not, financially literate.
Yeah, and
put it that way.
And I agree with you when it comes to financial literacy, financial knowledge, and as a society, and I know we do not pay so much attention where it matters most when we are trying to bring in financial knowledge, financial literacy, investment knowledge to a society. What level do you start on? Which we one day want to do a segment, especially how do you introduce kids? How do you introduce your children to money matters, to investment matters, to financial matters, such that by the time they are adult, they are making certain decisions, they have a basis, they have a foundation, which we do not see so much in our society. But let's now switch it up, because we know, we have talked about the biggest, for me, I'll tell you, for me, the biggest takeaways from when I look at Ponzi's, they target people who don't know, and we have said they don't know. And if I'm focusing in Kampala, those are the majority from the lower side. And yet, that's why you see for Capital Chicken, they used it so much. TikTok influencers, they use it so much. The local televisions that people who would want to make an extra buck use, and that's why they are the biggest victims. That class are the biggest victims, and they have to sit back and I say, now, if that person lands on this video, what would they take away? Or if someone who has not fallen victim to that video, but now they say, okay, we're keeping on talking about financial literacy. What is it? It has certain principles, it has certain things you have to know. And where should someone start from? That someone says, okay, Alex and Jean, you're talking about financial literacy. Now let's go into it. And as we reference it to the Ponzi schemes.
Okay.
Yeah.
And I know when we talk about financial literacy, maybe the question someone can ask is, should I then go and maybe take on a certification and become chartered financial analyst or an accountant and so forth? Not necessarily. I think, just like, for example, if I wanted to understand a little more about Premiership League and football or a certain sport, what do I do? Expose myself to the principles of that sport, immerse myself into what it means and what the rules are and so forth. So it's the same thing with finance. At the very basic level, try and get yourself to understand the basics of investing or the basics of money. Number one, there's no return that is going to come to you without a risk. Okay?
Yep.
And if you look at a lot of these schemes, what do they promise? A very high return. And again, like I said earlier on, very little is said about the risks, or they'll simply say there's no risk. That is a huge red flag. So if you take some time to educate yourself on investments and money and so forth, you quickly know that's not true.
Yeah.
All right. In fact, the higher the return, usually
the higher the
risk. So you have to ask yourself, are you willing to take on that risk? Okay. Secondly, most financial decisions that we make should be towards meeting our individual financial objectives and goals. So in personal finance and financial literacy, if you are not trying to meet, or if you've not set any personal financial goals and objectives, there's a very high chance whatever decision you make will likely be subpar or suboptimal. Why? Just like they say, I forget what the saying is, if you, we can cut this out. It's something about if you fall for anything, if you don't stand for something, you're like a sheep. Just if I've not set personal objectives and financial goals for myself, chances are I will fall for whatever scheme comes up, because I'm not really focused on anything from a financial point of view. So again, if you speak to a lot of financial planners or even advisors, the one thing they would advise everyone is try and have in place, personal goals and financial objectives. And that could even be something as simple as I'm trying to deal with my food woes. Okay.
Yeah.
That's my goal. That's where I'm at in my financial journey. So therefore, if I'm trying to, and I'll use that example, just looking at the lowest segment of our society, I'm trying to afford a meal tomorrow, the next day, next week, and this scheme comes up. Okay. Will my investment in that scheme then meet that objective? I think even just a question as simple as that could put me in a better position, because quickly I then start to see what risks may be involved, and whatever I'm being asked to put in, will it meet this objective? Otherwise, if I've not set any personal goals and objectives for myself, there's a very high chance I will fall prey to any scheme or any sort of word that comes to me about some investment.
There are 2 points which you have highlighted, which I want to emphasize at this point. The first one is when it comes to risk. It's possible, as we are trying to create investor awareness in regards to capital markets, investing in capital markets products, like the way it is in outside countries, in the Western world, in developed countries, that you can invest in a particular product and you might lose your money. That is a risk. But there are inherent risks that are coming with Ponzi's. You might you might invest in a stock of any company, and you invest it at 500 shillings per share, and a year later it goes to 350. That is not a Ponzi scheme. That's how sometimes markets play out, and people need to appreciate that. But then there are things that you need to see and say, how do I spot out inherent Ponzi's from the word go? You have to sit back and, as a society, as a person, sometimes the first principle when I tell people when you have to learn about financial literacy or investment knowledge is rationality in investments. Sometimes you have to take away certain irrationalities and learn to have certain core principles. First, if we're in Kampala, we are an agricultural nation. If I'm inviting you to invest in a chicken farm, and I'm saying if you give me 200k, we know those for the rearing people, they know each chick is around 2,000. So if you're giving me 200k, those are like 100 chicks I'm going to buy for you. And then I promise you a 40% return every 4 months. Rationality. How I, as a person, what are you literally doing for you to bring up those returns? I've been at the farm. I know someone, you know someone who's doing the chicken farm. You know someone who's doing so and so. Like, you have to sometimes sit back and ask yourself. You don't need to know so many things. But the fact that you can easily retrospective and say, how is this person making all this money from? How are they doing it? Sometimes that rational thinking will kind of help you to identify the gaps, to identify the schemes, to identify the things that are getting designed as Ponzi's. The second thing you have to appreciate in business and in investments, when you start educating yourself is, which you talked about the risk, that when we talk about risks, we are saying something can go down. Business can fail for any reasons. Not every business that is failing is because it was a Ponzi. You might invest into something, and I'm not trying to downplay so many investments that might come in the country. We are trying to take off in our capital markets. So I don't want people to get scared that, okay, everything, if it fails, it was a Ponzi. No, businesses do fail. That's the risk. But also, when you're analyzing the risk, analyze the return. If I'm promising you anything 20% and above, especially per year, automatically you're taking on too much risk. That is principle that people need to understand, to say, okay, if I'm giving you 1 million, you're going to give me 200k every month for the next 20 years. That's too much money I'm going to make from this initial investment. That means the risk of that failing is too much. And that's when at this point I want actually to quote it when I was talking about the Youth Africa platform, the goat farming, where they are saying you pay 2.5 million and you get 12 million every single year for the rest of your life. What kind of investment is someone doing? I know goats can make money, but for me to buy 5 goats and then get profits of 10 goats every single year forever. No, it's impossible. And that's what people need to understand, that when someone tells you this much return, always just know that much risk it is. And much risk is always designed. And if someone is not willing to talk about the risk, they automatically are implying they're hiding something. So you are trying to invest. You don't, even if you don't know so much about investments, if people can learn the starting two things that people to learn. One, the rationality of your decisions. Try to be rational. Try to think critically. What are you doing? What are you doing? You're investing in a company, don't even use its product. You don't know where their farm is. You cannot do anything, but you're just trying, because they're putting you the profits. Sometimes when you take a step back, that's when you might see the red flags. Now, the two always, return goes with risks. Return goes with risks. And if people can always stand to learn those two things, it will help them to know when should I put on brakes. Should I, what you talked about when you have your goals, setting your goals, is this risk I'm taking on, is it within my plans? Do not look so much on the return. Yes, look at the return, but also look at the risk and say, I'm in my food war. I'm still in my food wars. I have made a savings of 2 million. If I'm taking it to Capital Chicken, I might lose all of it. Is it something I'm willing to take? Or should I put this 2 million and go maybe buy land in Masakada and keep that land there? That rationality is what will keep people moving. Which then also brings me to the third point, the third question I wanted to ask. When it comes to Ponzi's, they're designed in such a way that they are hard to detect. Also, the marketing is sometimes very good. People who are designing them are sometimes very, very, very clever. How do people spot this? What would you tell someone that, okay, these schemes, these are the things we have seen in common, how they get designed, and you as a person need to kind of look out for these things to at least rationally avoid such.
Okay. And you made a comparison just a few minutes ago, comparing, let's say, Capital Chickens to buying stock. Okay. And I feel like many times we use this word Ponzi schemes or scams in very generic terms. Sometimes some of these schemes, were actually set up with the best intentions in mind, right? For example, I'll take an example of the Capital Chicken. Yes, chicken rearing is a business, and there's so many people making money out of it. I think there's another one floating around that I might have seen on Twitter.
Investor Chicken,
I think Investor Chicken or goat rearing or whatever. There's so many legitimate funds, either agricultural funds and so forth, whose primary product is chicken rearing, goat farming, and so forth. So I won't be quick to say that if someone started collecting money to rear goats and it fails, it was a scheme or an illicit scheme from get-go. I think what makes them Ponzi or scams is how they are promoted. Okay, if an individual comes to you and says, "I have a business of rearing chicken. If you give me your money, I can turn around a 80% return in 3 months. No risk to you." Immediately, that should set up some red flags. Because if anyone understands any investment products, and in fact, a lot of what we consider legitimate investment products, the promoters of them make it very clear that you could lose your money. In fact, you could lose all your money. So that when you're investing, you go in with that consciousness. Okay. And the reason they bring this forth to you is to, one, highlight that these are the risks around this investment. Are they in line with your own personal objectives and goals? Secondly, are they in line with your risk appetite? Very important. Okay. And risk appetite is really, one, your ability and willingness to take on risk and your investment horizon. For example, my personal goal could be to take my child to a certain school in the next 5 years. So I have 5 years worth of time to be able to meet that objective and goal. So if an investment is presented to me, we have this investment scheme or investment vehicle that would want you to bring your money into, I then go back and ask myself, what are my key financial objectives. One, to have my child go to X amount of schools. When in 5 years' time, then I ask myself, will this investment product that I'm being presented meet those objectives? Okay. Secondly, I'm being promised an X amount of return, and there's no risk. I then go back and dig around. Okay, this is my understanding of this product. Is it really true that there's no risks in chicken rearing? Okay, then compare it to what I'm being promised. What I was saying is that critically thinking through this product with that financial literacy that we talked about. And you could even do that yourself if you have the tools and the skills and the knowledge, or if it's someone that doesn't think they have the right financial knowledge, speak to someone that is believable. You know, a lot of these financial advisors, qualified, are accessible to us today. Speak to them, run it by them. That is you making a conscious decision or applying some level of financial literacy to discern a given product. Because you're one trying to understand its characteristics, what are its risk factors, is what is being presented to me indeed true? Okay. And secondly, does it meet my personal goals and objectives? And is it in line with my personal risk appetite? And you have to look at that from an individual point of view, because as individuals, although things are different for all of us, you know, I could be making the same amount of money as Alex Kakande, but my goals are totally different. My personal objectives are totally different.
And where
my risk appetite and where I am in life are totally different. Maybe Capital Chicken could be a risk worth taking, but maybe it's not the case for Kakande.
Yep.
Okay. So these, what we call schemes, going back to my point, may not necessarily, the intention may not have been to scam or steal money from anyone, but because of the information being fed to you and so forth, they end up falling under that category. The other thing you want to ask yourself, again, going back to the financial literacy, that the person promoting this scheme, are they competent enough?
Yeah.
Okay. Or is it just someone who's, you know, very well articulate and they're able to, through their connections, get airplay on radio stations and influencers and push this product? But part of that financial literacy is to ask yourself, this person promoting this product, are they believable? Are they credible? Do they have the right knowledge and skills to, in fact, manage this product and manage my money?
Which brings into 2 points. One, at least in Uganda, and I might have someone who might not be listening in from Uganda, everything that solicits investments from the public falls under capital markets. And that means you need approvals from the Capital Markets Authority. So you would, as an investor, you would want to put your money in something that at least it's regulated, at least it's approved by the authority. Now, does that protect your money? No, but at least inherently reduces your risk in that particular investment that you're making. So for me, how someone would want this, some of the starting position for someone to spot scams or Ponzi's would be, ask about the risk. If you ever ask someone, what is the risk of me making an investment in this particular product or in this particular company, and they tell you none, that's the first risk. That's the first red flag. Even the safest investments, we call the safest investments, which are investments in treasury securities, we still tell people there are risks in there. Someone can tell you if the government can default and refuses to pay for a year, or but at least there is a risk, even if it's so remote. What about investing in Kakande's company that is rare as chicken? Automatically, Kakande, if something happens to Kakande, it might go bust. Now, if someone tells there is no risk in an investment they're trying to make you invest in, run. 2, if something is not, you cannot easily coordinate if it was approved. They don't have relevant approvals from the Capital Markets Authority. They don't have, Mr. Keith Karejera said, an approved prospectus that can allow them to solicit investments from the public. Run. Run. 3, if they are aggressively marketing it and the dependence of their success is dependent on how many people they bring in, that if your success will depend on the 5-10 people you bring in extra, those are some of the indicators. I'm not saying companies shouldn't market, or companies that aggressively market as scams, because an IPO, if you're going to run an IPO and you want it to be successful, you have to promote it and market it. But if a company all of a sudden is telling you for the success of your company, for the success of your returns, are dependent on you bringing in 5 people, the other 5 people also bring in other 2 people, then you could start harassing your family members and your friends to join in this. Then sometimes you want to ask yourself, am I trying to put people into bad news, right? That means those are some of the red flags. And maybe the last one, which you have talked about, the competence of the people who are running it. Sometimes, and I'm going to call it, when you're investing in certain companies, in what I would term as capital markets companies, ask who are running these people. Where have they come from? What history do they have? If you want to invest, let's assume tomorrow Kakanda I'm starting a company and I'm soliciting funds from the public. Come and say, but where has he come from? What is his history? We live on an internet age. Information is almost everywhere. Before you put your money into this company, sit back and say, if you can't find anything whatsoever about the person, maybe there is a reason why they don't exist. And that should tell you so much for you not to invest and risk your money. For me, that's very, very important. And I know as we try to finalize, we have talked about financial literacy as far as someone should spot onto the kids, but briefly onto the person that are investing in. Briefly, it's something which I'm so dear on. How do we incorporate financial knowledge and financial literacy into the society? At what age? What are we not doing right to ensure that people have all the necessary, at least the starting necessary skills, the knowledge to make starting decisions when it comes to money and investments?
All right. I don't think there's a single source for financial knowledge or literacy. Your space, for example, which mostly hosts people that are fluent in finance and topics within that realm, could be a source for people to educate themselves on finances. I think today's internet age also gives a very good platform. Almost anything is available on the internet today. If someone presented to me a business on rearing chicken and goats and whatnot, I could simply go to the internet, type in what are the risks, what could go wrong if I invested in this kind of business. And that in itself would educate me, not just about the business, but the finances relating to that business. The other, the traditional method is through schools. I recall when I was in high school, and I don't know if the Capital Markets Authority of Uganda still does this, the CMA used to come into schools and get students to get involved in a competition of sorts. This a few years ago. I'm not sure if this still happens, but I thought it was a very good initiative, right? So I got partly involved back in my day in high school. And some of the things that I learned then and principles stayed with me. Of course, I've been fortunate enough to work in the financial services and, gotten qualifications and educated myself. So I've gotten much better in that angle. But I think such initiatives by the CMA and authorities that are charged with making sure our people are safeguarded from some of these illicit investments could take this as an avenue. Another could be, you don't always have to take this on yourself. Let's give an example of health, right? As a bare minimum, I believe each person should have an idea of what foods are healthy for me, what foods are bad for me, what conditions are good for my health, and so forth. But that doesn't necessarily make you a doctor. You still have to consult people that are fluent and are highly skilled in this field. Same with financing. What I usually tell my friends and people close to me is, before you make a big financial decision, whether that is to buy a house, whether that is to buy a car, whether it's to buy insurance, whether to invest your money in a scheme, speak to someone who understands, since we're talking about finance, who's financially literate. Speak to them. Some of the things that you may learn could be life-changing. Even myself, I consider myself to have a sufficient amount of financial literacy, but every now and then I speak to a financial advisor. regarding my own personal finances. And a lot of the things that I learned have helped me make very good decisions. Why? Because again, going back to our inherent nature as human beings, we are irrational and we have certain emotional biases. Okay, so even with all my financial literacy and skills and experience, I may still make some suboptimal decisions because of my personal biases and my own behavioral
desires.
Yeah, desires. But then someone who's independent of those could maybe help combat some of those behavioral biases. So speaking to someone that is literate in finance could go a long way in safeguarding us and really building some of that financial knowledge. Now, speaking a little bit to that point is most people, who do they run to when they need to hear about finances, or where do most people get their financial advice? It's either their religious leaders or pastors, it's either their friends, parents, relatives, teachers. So the thing, going back to the point I just mentioned, speaking to people who are fluent or skilled in finance is very important. It doesn't have to be your brother or your sister, your teacher, your uncle, because these people may as well just be as illiterate as you are, and there's not much they will add to you. But speaking to someone like Akande, for example, could go a very long way in dealing or helping us build our financial literacy. So I don't think it's one channel, but first of all, knowing that financial literacy is not something that we are inherently born with, or magically know about because we went to school, or yes, I think is the first step towards financial literacy. Okay, knowing that if I needed to know anything about surgery or dental surgery or whatever field it is in medicine, I need to build certain skills, consciously educate myself. Similar with financial literacy or financial knowledge, as is the case with any other field of expertise.
Yeah. I think you have highlighted a very good point. In Uganda, it's just growing, it's just starting up, that people are appreciating how much important to have financial knowledge, how much important to have investment.
Right.
So it's just starting to, in Uganda, it's just starting to grow that people are appreciating financial knowledge. When you think about someone, a police officer, a retired police officer who put 300 million into capital chicken, you want to cry. Someone, by the time you have that amount of cash, go talk to financial advisors. They are quite a number. They are respected. They are knowledgeable. And even if they make you fall into victim, you have a recourse. Because most of these are members of respected bodies and respected organizations. So there is protection that you can fall onto. Two, people need to appreciate that you cannot go onto this on your own, especially a certain class. For me, I would say it that way. If you are starting to enter the middle class and then investing a significant amount of money, sometimes that little cost you're going to incur to go and get a firm to work on your accounts, to work on your tax returns, to work on your investment plan, on your long-term investment strategy, on your inheritance plans, is worth it as compared to you thinking you can do it on your own. And people need to start appreciating that, taking time to learn, be knowledgeable about certain things. And also, one last thing for me is, when you see something bad, speak about it. When you see a Ponzi, do not keep quiet. Don't just justify your morality. Say, let me enter early and I get some money and I will move out, then other people can die of it. Speak up against it. We need to develop a conscious society that understands when one person loses, the other loses. So you might know, or you might see that it might be a scam. It might be a Ponzi.
All right.
You might not have the facts right, but at least tell the people close to you. You might not post it online because it might be a legal issue, but tell people about it. Like, okay, that thing, I'm seeing the red flags here. If you ever want to invest in it, ask these questions. And the more we spread that, the more we become our brother's keepers, the more we can easily avoid that. And that way we can combat as many scams as possible. That, because otherwise, it's our friends, it's our families, it's our people who know who recruit us. People are using TikTok every single day to promote some of these things, and they never sit back and ask themselves, but how is that possible? So if you have a platform, if you have a voice, that voice might be to your kids, to your family, to your parents, to anyone, tell them about the red flags. When you see something in the society that is not doing well, speak out and say, this is not right.
Okay.
So, Jean, in one or two words as we conclude, your parting remarks for our viewers.
Yeah, I think this is a very wide topic, Alex, and we've really just skimmed or done an executive summary of the depth of this topic, and I'm hoping we'll have another opportunity to explore it even further, because we've very briefly touched on financial literacy and how it's a very good tool to help us combat some of these schemes and how prone we are to them. Maybe next time we can get into the crux of what financial literacy really is, and even much deeper into how can I build my financial literacy and so forth. But in closing, I just wanted to say the success of any financial system or capital markets really depends on trust and credibility. What classes a lot of these schemes as Ponzi's, even though they had very good intentions starting out, is the credibility of the individuals promoting and running them, how trustworthy they are, but also most importantly, are they skilled in doing the thing, right? If you came, for example, to me with let's say a pharmaceutical product as an investment, all right? You may have all the good intentions, but the fact that this is not within your wheelhouse or you're not skilled at pharmacy or pharmaceutical products quickly diminishes your credibility and probably whether I can trust you to deliver on that promise or not. It doesn't mean that you're a bad person and you'll come out to steal my money and so forth, but it just quickly means you're promoting something one you do not have sufficient knowledge on, and quickly knocks down your credibility and your trustworthiness as regards that product. So as the investing public, it's very important for us to, again, check these products, most importantly, the people behind them. Are they trustworthy? Are they credible? Are they skilled at whatever product they are pushing? Secondly, and something that when I listen to the experts with Keith Kalejira, the Capital Markets Authority is really charged with making sure anyone collecting money or purporting to manage capital on behalf of the investing public has the, first of all, right permission or certifications to do so by the CMA, who are the body charged to do that. But they really cannot do it all, like you said, and this is the case with all regulatory bodies across the world. They'll constantly scan for these scams and try and deal with them as provided within the regulations. But it again goes back to we, the investing public. If you see something that does not fall under some of the characteristics we spoke of, speak up, bring it up, inform the authorities, okay, and deal with them. And again, we can only do this by building our financial literacy. If I'm financially illiterate and something is presented to me, chances I'm just going to focus on, what return are they promising? 60%, and that's it. But if I'm literate to the extent that I can discern what is likely a Ponzi, okay, I can discern whether it's been authorized or licensed by the CMA or not, then I stand a better chance to protect myself, the rest of the investing public, and the financial system as a whole.
Thank you so much, Jean. And my parting remarks are, I'm hopeful the victims of the capital chicken get some recourse and they get some of their money back. We are going to keep on monitoring the situation. But at the same time, I'm sending the same message to the regulators. We cannot play catch up. The society we are playing in is changing every single day. The media people are using are changing every single day. You would want to see them evolving. One, they issued 3 warnings. Capital Markets Authority issued 3 warnings on 3 companies. One has gone down. let's hope they are already doing something on the other two until before it
Definitely.
goes down and people are losing money. That's one. Two, we cannot wait and see the same happening. Some of these companies are in broad daylight. We need to have a supervisory body to always see who is soliciting, investing capital from the public. Have they registered? Capital Markets Authority cannot play catch up. CMA, Capital Chicken, has been in existence for over 2 years.
Wow.
You would want to ask, where has Capital Markets Authority been for all these years? They knew they weren't approved, but they were soliciting funds. They were on radios, on TVs. You could not say none of the supervision departments had never seen the advert. And three, you would want to kind of enforce this because we need to protect our people. We can no longer just lie back and hide behind the scenes where we say the public will figure it out. The public should have the knowledge. As a government, you need to protect your citizens. So it's a clerical call to the regulators, to the bodies that are concerned, and everyone with the power to do something. Please. They are much. There are many more there, which we are seeing that you need to look into. We cannot wait for another Capital Chicken to happen. If we get strong enough to kind of combat, and they might not be doing anything wrong, but go and look into it. And when you said everything is right, yes, you know the public continue doing everything well. But as soon as you see a red flag, by the time it starts to promote, because they promote publicly, they promote on TV, on radio, on media stations, which means you know. Or you kind of should know about them. It's your business to know. You cannot wait for 2 years when something's about to go bust and then you come out and then you say, thing that the public should know. It's my parting shot for the legislators, but also for the investing public. Let's speak up. Thank you so much.
All right, thanks a lot, Alex. And I'm sure we'll. And it's a very rich topic. There's so much that we could say around, you know, the scams and the CMA and people building financial literacy. So again, this for me was just a very high level introduction into this topic, and I hope we can run another segment on this.
Definitely.
All right.
Thank you so much.
All right.